So clearly, in year-on-year terms, it's not very big, but maybe we should quickly get to Aditi Nayar, the chief economist at ICRA. Aditi, I guess you are able to see on your own screen some of the important numbers. 0.52 as far as the headline inflation, WPI is concerned. Food inflation again 0.2% higher compared to -2 in July. Manufactured products inflation is fortunately at least a little better at 2.56% compared to 2% again in July. What have you made of all these numbers? Should we see WPI going up, or is this a blip and you will again see minus numbers in the next couple of months?
Thank you, Lata. So overall, we were expecting the number to come in at 0.5%, which is where it has come in, and the broad internals for food and core inflation seem to be in line with what we had expected. Now, in terms of the outlook, I do think that the overall food inflation will slip back into a deflation in the month of September. That's what the early numbers for food items are suggesting right now. However, I do think that the headline inflation is going to inch up further. It's probably going to remain sub 1%, but it's going to inch up further in the month of September and perhaps come down after that. So a bit of a mixed trend in terms of the headline and the food inflation trajectory that we're expecting over the next month or two. But overall, I think the WPI is still just about going to be an average of 1% for FY26, so still going to be a very, very low number this year.
FY26 is 1%, okay, not just this quarter or something. So we should therefore expect a good real GDP number for July, August, September as well?
Well, in terms of the real GDP number, I think it's going to step down from the number that we got for Q1. That surprised us quite positively. And a couple of the areas where the momentum is going to be very different in Q2 as compared to Q1. One is the government capex, where there was a lot of front loading in Q1 on a low base, and that's going to automatically turn. And the second is the fronting in shipments that we saw, particularly to the US. That momentum will also dry up a little bit in Q2 and thereafter. So my sense is that the real GDP number in Q2 is going to be significantly lower than Q1.
Q1. Okay, but there is an advantage of a low base. Last year, it was only 5.6% Q2. So perhaps a little bit of help from that. But Aditi, a final question to you. What should we expect from the Reserve Bank on October 1st with CPI below expectation, WPI still near negative or flat?
So Lata, quite an interesting scenario for the MPC, particularly with the GST related changes, expected to bring down the CPI inflation below what had last been projected by the MPC. While that would suggest that there is room for a rate cut, the expectations on growth are better now. And my sense is that we'll get a pause at least in the October policy. We do think that the extended pause is here to stay.
Okay. All right. We'll leave it at that, Aditi. Thank you very much for joining us. So WPI inflation coming in at 0.5%, a little better than the -0.5 month ago, but still going to be barely 1% for the full year. Just a word more on the GST cuts that Aditi alluded to. Because of that, a lot of economists are lowering their already low full year CPI number. The CPI number was standing at 3.1, 3.2. The Reserve Bank is at 3.1. But now, today we had a Citibank forecast that it could be 2.9 because the GST related price cuts will mean at least about 15-16% of CPI is going to become cheaper. And therefore, that makes the October 1 policy once again live. I wouldn't be surprised if we get a deeply divided poll when we present it. So it's going to be an interesting October 1 policy. But on WPI, we once again remain subdued, except that food inflation has inched up a wee bit for the better. That's it from WPI.
Absolutely. But Lata, thank you so much for that. Keep it